Yeah, infinite return, baby. Just let it cash flow. Cash flow is just going to keep getting better as we get the burn units up, and as the other units turn, they're getting a pop in rent as well. It was averaging $635 a unit upon purchase. We'll have it up to, I'd say, at least $695.
Welcome to the Apartment Investing Journey, where we explore every facet of multifamily investing and development with top investors, brokers, and service providers who share their strategies, successes, and secrets to help you on your apartment investing journey.
Hey guys, welcome to the Apartment Investing Journey. My name is David Robinson. Our guest today on the show is Caleb Bryant with Relentless Capital Group. Caleb began his career in real estate in 2014 after realizing that touring with a metalcore band wasn't going to pay the bills. And after a couple of years of studying, he began to invest in real estate. Since then, he has invested in over 600 units worth of multifamily and single family. All that said, Caleb, welcome to the show.
Thank you for having me. Appreciate it.
My pleasure. Looking forward to getting into your story here. That's one of the shortest and coolest bios that I've had an opportunity to read thus far. So, man, if you can, maybe take a minute and tell us a little bit more about yourself and your apartment investing journey so far. Maybe take us back to, these days of touring with the band. Okay.
Well, when I graduated high school, I went to the first class in community college, and when that class was done, I went to the teacher and said, "Thanks, but I won't be seeing you again." I was like, I know I don't know what I want to do, so I'm going to do something else instead of college for now. So I went and toured with a couple different bands over the course of a couple of years, recorded a couple EPs and things with those bands, and toured all over the United States. But it wasn't something that I wanted to make money doing. So I did end up going to school for audio engineering, but I wasn't planning on making money with that avenue. More so just for fun, learning it, having a hobby that I could enjoy.
So when was it, in that time frame where you started to think to yourself, you know what, maybe this isn't the right career path for me? And what even got your mind thinking about real estate?
I knew before I even went to school that it wasn't the right career path, but I went anyway. Real estate specifically didn't come until... So my parents didn't necessarily know that it wasn't the right career choice for me. So they were all on board. You're going to do music. But then when I told them I wasn't, as far as a career, they're like, okay, well, how can we help you? And so they started connecting me with people that might be able to help me find something to do in life. So a few of those people were in real estate. My dad actually has done some real estate deals as well, different types of deals. And that's what started it. But what I learned from the first people I networked with in real estate was they were getting big chunks of money, but they had to work for each new chunk of money. So I wanted to find something with cash flow, and that's what ultimately led me to look at the multifamily industry.
Did someone bridge the gap for you when you said, all right, hey, I'm interested in cash flow? And what caused you to say, all right, multifamily is the space?
I guess it was Ken Mcelroy. I read his book and I was like, that's exactly what I'm looking for. Forced appreciation, cash flow, tax benefits, and scale. You can scale it easier than single family. So all of that spoke to me. And so that was the first... real estate seemed cool from the beginning, but that was the first time I was like, okay, definitely this.
And so take us from there. There's the seed planted with his book, talking with your dad, interacting with some other people that were in real estate. There's the seed planted and you think, all right, that's what I want to attack. What happens next? What were the steps that you took?
So I moved to the Nashville area, Williamson County, Tennessee. One, because I was familiar with it and I liked it, but two, because I knew that it was the 8th richest county in America based on household income. There's a lot of good networking there. So I wanted to build a network. The first step I think Bigger Pockets, I got on there and started connecting with a lot of local investors, which ended up being a very good step, meeting a lot of people doing similar things to what I wanted to do, because in the long run, that's where a lot of my leverage in the business has actually come from is networking. But I moved there. I didn't want to be in the area I was simply because real estate doesn't really move. I wanted to see trading. So Nashville's a pretty hot market, but ultimately it was a little pricey for what I thought I could do. So I ended up looking south in Huntsville, Alabama, which is about an hour and a half from where I was.
Did you end up moving to Huntsville, or did you just...
I remote at first, and then I moved there to kind of really solidify some relationships and solidify my presence in the market. And then now I'm in Virginia for the moment.
Okay, great.
With systems in place
to be able to manage that remotely as well. Okay. So you mentioned that you spent about a few years, or at least a couple years, studying before you actually dove into things. Was this in this time frame? Is this part of your studying and learning?
Yeah, that was like the networking phase, the move into Nashville phase, all of that. It's like I wanted to do it, but I hadn't fully flipped the commitment switch. But kind of every step I took was in that general direction. It's just I didn't know how to go at it 100% yet, because I just didn't know it enough about it. So
then you decided, all right, maybe we should start looking at the Alabama market, Huntsville, I think you mentioned. Is that right?
Yeah.
Okay. And where'd you go from there?
My first deal was a passive deal. So I was getting frustrated when the deal I wanted wasn't there. So I invested in someone else's deal, and I did that a couple times, and I got to see how they communicate with passive investors and how they... it's essentially marketing, how they market their deals. And that was a pretty good learning experience, but it still didn't have the hands-on part that I really wanted. So I had to go find a real deal. And that ended up taking me down the street a little further to Birmingham, where I met my current partners today.
Okay. Well, before we go to Birmingham, I think a lot of our listeners are just where you were when you first started. Like it's intriguing, this idea of cash flow, the idea of the tax benefits and the leverage that you can apply to multifamily real estate. And you went the route of being a passive investor before taking on your first deal as an active investor. Do you mind maybe just shedding a little bit more light on what that experience was like for you, and how did you go through that process?
Well, so there were a couple why. It wasn't just because I wasn't finding my own deal that I wanted. It was also because I was a little bit scared of doing my own deal. And I wanted to start building cash flow now. So there were a few reasons. Like I said, the deal and getting into a passive deal actually ultimately helped me quit my job over time. So yeah, I would say it can be a good place to start. It was a little bit stressful because it was the most money I had put out ever, but I'd known these people for a while. I read through every single word of the PPM myself multiple times and the OM, and I ran my own numbers, and I talked to property managers and did all of that. But like some of the things I didn't know is I got $30-some thousand in depreciation from that first deal. I ended up not really having to pay taxes on anything. So all my W-2 combined with the passive deals I got into, there was nothing left. So it just looked like I made no money, which was awesome. So there were benefits I didn't even know about, but I ended up getting. And then I learned a lot from how they communicate with investors, because they're very transparent with what's going on. Hey, we didn't quite hit the occupancy goal we were looking for, and here's why. Here's what we're doing to fix it. Or hey, we're a little bit ahead, so awesome. Things like that.
Yeah, I can imagine that was really helpful to you in bridging the gap from wanting to invest, but having some fears and some concerns, to then going full bore into your own deals, and sort of got you into the game. Were you working during this time? Did you have any other sources of income as you were making this transition into real estate?
Yeah, I had other sources of income, whether it be at the beginning in the research phase, it was just random jobs. I didn't have high costs. I didn't have a house or anything. So I really didn't spend much. So it was easy to make money. So gas stations, worked for a radio station, worked for, I sold cars at Nissan for a little while, which I hated. Worked as a realtor briefly. I'm not a retail sales guy. Real estate. I found that out real quick, but it gave me some good experiences because I did get to work with some investors.
So this is interesting, and this is a cool story. Like I think a lot of individuals that may be listening may be in a place where they don't feel like they can make this happen in their life. Maybe they feel like they need to wait until they have more income or more money saved up, or maybe they're scared of losing the money, or maybe they just don't understand the process. There's so many reasons why we hold off from taking action on what we know will ultimately be the right thing to do. And you broke through that. And it wasn't like you were working at some tech company and making hundreds of thousands of dollars. You're just grinding and learning as you go.
Yeah. And like I always try to get jobs where I could learn more about the business while doing it. So Domino's, podcast in the car the whole time, or most of the time. I worked in a warehouse for a while. Same thing, could have headphones in. I worked for a mortgage company for a while. That was kind of like the retail real estate sales, where it actually didn't benefit me a ton, but I did learn a bit about the loan programs and things. So it did have a little bit of a benefit. It's just you had to work like 65 hours to really. It took too much time. But as far as breaking through a lot of those things you mentioned, you don't know everything, but no one does. So partner with people that know a lot more than you. One. Two, networking at the beginning. Actually, this is probably one. But networking at the beginning, the money's out there. So it doesn't. The last deal I bought was 96 units with my team, and I could have put no money in the deal. I chose to put money in the deal because I just like the way that looks, but I had the money available from someone else to close the deal. So it doesn't necessarily have to take your money. I do suggest, to align interests, making it a priority to put some of yours in shows you believe in the deal, but it doesn't necessarily have to be your money. And there's pieces of the business you can do that take much less capital than buying the whole $4 million building or whatever it is.
Yeah, good insight. Thanks for that. Okay, so bring us forward. You first invest passively in this deal, and do you mind giving us an idea of like what time frame was that? What year was that?
It's been maybe 2.5 years, not too overly long ago, maybe 3 years now.
And so you do that first deal as a passive investor. You experience what it's like. You probably learn a lot during the process, especially understanding how the syndicator was actually marketing the deal to other people, explaining it, marketing the process, and raising capital for it. You got to experience what that was all like. And then take us forward from there. What were the next steps for you?
So I was working with a lot of people in Huntsville trying to find my first deal. And so I was working with wholesalers, and one who's now my business partner that came later. But I was just trying to find a way to either add value to someone or just pick up a deal. And through mostly luck, I was looking for something completely different, searching on Craigslist for basically how other owners were marketing owner finance properties. So nothing even related to multifamily. Happened to meet this lady who connected me to my current multifamily team. So I was out looking at a single family property in Jackson, Tennessee, and I got on a call with Reggie, one of my business partners, and immediately I said, "Oh, I'll be there tomorrow." Like, he had an opportunity available. I wanted to come see it, and it was in Birmingham. So I drove down. It was a 75 unit property, but it wasn't just the deal that caught me. It was his mindset, the Think and Grow Rich mindset, just very, very positive, very good person with similar values to mine. So I said, well, if I get in on this deal, I'm going to want to be in on future deals. I want to work together for the long term. So that first trip, I didn't meet Anthony, which is the other business partner I have. But I went down the second time, met Anthony, and we all just clicked. He's got a burn the ships tattoo, which is a reference from the book, Think and Grow Rich. And like my core thing is be relentless. So very similar mindsets. And the deal itself was great, and it's been on from there.
Okay, so that was a 75 unit in Birmingham, and ultimately this connection through doing some random searching on owner finance to connecting with a lady that put you in touch with your now business partners. It's amazing how that journey just sort of took you down this path and ultimately led you to where you're at today. This first 75 unit in Birmingham, did you guys officially partner after that deal, or did you formulate a formal partnership prior to acquiring that 75 unit? Interesting
question. As far as like, we're not an official group. We all together to buy properties. So each property, we didn't want to do it that way because each property we might be able to bring something different to the table. So no deal looks the same. We're all going to be in on the deal, but we might be in at different percentages or different because we might have different tasks on each given property. So the answer to that question is no. It's more of a each deal basis.
And I think that's important for people to understand is that getting into this business, there's different facets of the business, whether it be analyzing deals, sourcing deals, acquiring the deals, raising funds, managing the asset after the fact, all of that, right? There's so many different and different skill sets and different people are going to gravitate towards different parts of that business. Have you found yourself gravitating towards one area of the business or another at this point?
I'm basically just a connections guy. So I network nationally, consistently, and that's the value I bring. So Anthony, he's amazing with operations, construction management. He's been doing this since 2005. Reggie is great, and we all do a little bit of everything. So I don't want to say this is the only thing that things.
Sure.
Reggie is great with broker relationships, has been building those for a long time. Both these guys have lived in Birmingham their whole lives. But the element I bring is simply, I know people in, whether it be equity or I know lots of debt, which they have great connections for money as well. But I just added an element of both the networking, but then also a little bit more of the marketing side where I draw attention.
Yeah.
Those guys don't, they're low key is the best way to put it. They don't do a lot on social media. They don't post pictures, but they do big things.
Yeah, they're behind the scenes, making sure the deal runs and taking certain aspects of it. And you're maybe the personality on the front end of things.
Yeah, I'm the personality that brings people in, and then they get to enjoy all three of us once they get in.
Yeah, man, that's great. Where are you at today in your real estate business?
So like I said, you said in the bio, I've invested in about 600 units between the passive and active. Together, me and my partners have done 170 active units since we partnered up, and working on some big things in the very near future. So I'm excited about that. As far as goals, we would love to close 600 units this year. And we've done 96. We've been close on a few others. And then we're working on a larger deal right now. So I'm confident that that's feasible. And if not, we're going to we're going to hit close.
Cool. Good for you. Those are some big numbers. Okay, cool. So I want to shift gears a little bit. You mentioned the 96 unit in Center Point, Alabama. Are you okay if we just sort of dive into that a little bit?
Yeah, let's go for it.
Well, if you can, let's start from the beginning on that. How did you source the deal? Where did it come from? Was it on market, off market? Walk us through sourcing the deal and the acquisition part.
So it was off market at the time, but it had previously been on the market. So a couple years ago, it was a part of a portfolio. It was 4 properties, and 3 of those properties sold. This one didn't because it had a title issue at the time, a lady claiming that a corner of the property was hers or something like that. Over the time, the current owner, or the previous owner rather, fixed that issue, but they didn't have the same buyer pool they did before. And so a broker actually brought the lead to us, and we had like the OM from a couple years ago and stuff like that. But it was off market deal. And a lot of the stuff, honestly, that trades is off market. It just happens without you noticing it.
Sure. Okay. So the broker brings the deal to you, lets you know about it. Take us through the acquisition process.
We typically do a lot of the due diligence, or we do a lot before we ever get the property under contract, just to make sure that we can execute. So we put 15 to 20 days in before we ever got it under contract. And then from there, we did a 30-day close. We tackled the deal with private money at the front end, or hard money in terms of the rates that we got for it. Purchase price was $2.8 million, so $29,000, or a little over $29,000 a door. But not factored into that were some insurance proceeds and things that we ended up getting because once we got it under contract, we knew there were 2 burn units going in, but then another fire happened while we were under contract. So 6 more units went down. We obviously had to go talk to them about that. And so we basically just assigned the insurance proceeds to us. From a numbers standpoint, that gave us the opportunity to put 6, and they're all 3-bedroom units, the ones that burned, 6 3-bedroom units to market level immediately. So from a pure number standpoint, a couple months of lost rent, but which was covered by insurance, but it gets us to market even faster than projected. So you could see that from a number standpoint as a good thing. Obviously, you never want any of those things to happen, but.
Okay. And briefly describe to us the nature of the property.
Yes. Well, so it's like a C plus area, and then it was a 72, 73 build. So it's pretty much a standard Class C brick exterior, decent roofs. There were some things like some of the bathrooms aren't updated since it was built, you could tell, and stuff like that. But it's as far as the level of a lift, it wasn't a heavy lift. There were just little things you could do here and there to really increase the value.
And you mentioned that you spent about 15, 20 days on site prior to even going under contract so that you can be in a position to feel comfortable and confident that you can close on the deal. What kind of things are you doing in that 15 to 20 day timeline to make sure that you feel comfortable with it?
Because we're closing with private money, we can get our lenders take on it, kind of underwrite the deal before we even get it. So we send those numbers to the guys. They underwrite it like, yeah, we'll do this. Here are the terms we can do. Maybe shop that around a little bit. And then basically we know exactly what we need going in. So there are obviously inspections could bring up things once under contract, but for the most part, we're pretty confident. We know what are the trends as far as what type of maintenance requests they're getting. Is there a bigger issue we need to worry about? We've already walked the property, so we have a pretty good feeling for if it's structurally sound. For the most part, we've toured some of the units, sometimes secret shopped them, sometimes with permission. Yeah, a lot of little stuff like that, and we basically know what we're going to need to bring to the deal before we get under contract, because we want to keep the broker relationships as strong as possible.
Yeah. Okay, great. And so you end up closing on the deal, and then what was the business plan moving forward from there?
So going into the deal, we wanted to be all money out of the deal in 6 months. So we tackle it with private money, which is expensive. So I think the terms on that one were 15%, 3 points. The way we did it, though, is we rolled a lot of the cost into the loan, so we had to pay the 3 points. But interest payments that would have been monthly, we rolled those into the loan. That way we didn't have a cash flow issue. Also, because we're using different money sources, sometimes we can get it for significantly less than, say, a syndication. You might need 30% of the purchase price raised. We needed about 10. So we needed $300,000 to close it. It was a $2.8 million deal, so a little over 10%. And then a few due diligence costs that came in before we had that number, so a little more than that. But that's ultimately how it came together. So we tackled it through a joint venture agreement, my 3 partners, and then we brought a 4th partner, also there in Birmingham, into the deal. They brought most of the 300. Then from there, it was just getting our operations in order, getting the systems in place, and then we were able to refinance and get all the money out of the deal 5 months and a week later. So Goodness. That just happened the first week of July.
Wow, that's great. Good for you. What was the renovation process like for you? Did it obviously you had some fires, and so you had to completely redo? I think you mentioned 3 of those units. I think 5 had been burned, but 3 you had to completely redo. Did I hear that right?
No. Two were burn units before we ever got to the property. So we knew about those to begin with, and we negotiated on those. But then 6 more after we went under contract. So a total of 8.
Oh, wow.
So eight down units due to fire.
How many units did you turn over? I'm just curious about the I mean, you refinanced in 5 months. You know, you guys are moving pretty quick on being able to add value, get that place back, get the building up to a place where you could refinance and pull your initial investment out.
At the time of the refinance, only 2 of the burn units had been redone, and it was the first 2 that we had already, because basically the insurance had already awarded or was about to award that money already. So we got that quickly. But for the other units, it took a little bit more time, people coming out, inspecting, doing everything. So we pulled permits on those a month ago, and we're making progress on those units now. But as far as the usual renovations, it's simple stuff, about $1,800 a unit, vinyl plank flooring, gray paint scheme, new countertops, and new countertops in the kitchen, painted cabinets in the kitchen, painted them white, and then some low flow fixtures, and a couple new like light fixtures and things, but nothing too serious.
So aside from the burn units, it was pretty light.
Yeah.
Okay. Awesome. So what's the game plan moving forward on this deal? You've pulled your initial investment out and just roll with it.
Yeah. Infinite return, baby. just let it cash flow.
Yeah.
Cash flow is just going to keep getting better as we get the burn units up. And as the other units turn, they're getting a pop in rent as well. It was averaging $635 a unit upon purchase. We'll have it up to, I'd say at least $695, but that could be a little higher depending on certain units are getting washer and dryer connections. And so we'll see how that plays out as well as far as rent bumps. But the deal itself from the beginning we knew was solid because at $2.8 million, we knew going in that its as-is value was 3.7. But we also knew with a little bit of work, it was going to be 4.85, which is what ended up being our appraised value for the refinance.
Wow, that's killer. In 5.5 months.
Yes.
Yeah. Okay, cool. Well, I've kept you longer than we intended, and I appreciate you going into detail on a lot of this stuff. I think it's helpful to people that are, interested in this business, but don't really know where to start, don't know where to go, and hearing someone else's journey, going from, being a metalcore band to, being on tour to, working for Domino's and touching in the mortgage space and the residential resale space, and ultimately getting to a place where your full-time job is investing in multifamily apartment buildings. And that's pretty cool. You've got a great story, and I've enjoyed watching you from afar. And I think you've got a cool little niche that you've carved out for yourself in the way that you market yourself. And you've got a big following, and I think it continues to grow. So I'm grateful for you to take some time to walk us through your journey and talk to us about this 96 unit. Before we sort of close off here, I've got 3 questions I want to ask you. Okay?
Yeah.
All right. Here we go. What is the biggest mistake you've made on your apartment investing journey so far?
I haven't made any serious mistakes. I think for me, it's about going too slowly, and you want to surround yourself with amazing people. And it just took me a while to get out of my shell and get around those people. And it takes a while to find them sometimes, even if you're diligent about it. But like I said, taking action on something completely different is what led me to my business partners. So you need to be taking action. When I was stagnant that I think that was my biggest mistake to this point.
Great. What's the biggest win you've had on your apartment investing journey so far?
The people that I now have in my life, hands down, because you could look at any individual deal. They were wins, but when you surround yourself with the right people, it's going to be a lifetime of wins.
And then last question for you. What's the best advice you have for someone who's just starting their apartment investing journey?
Networking is the most important place to start. And I did that by accident, but definitely do that first, whether it be, you don't have to buy into the education at these things, but go to the conferences like Best Ever Conference or Ultimate Partnering or Adam A. Adams has good ones. Just go, because you're going to meet amazing people, and they're going to give you a lot of the pieces to the puzzle.
All right, man. Well, Caleb, I appreciate you taking some time walking us through your journey. I think you've got a great story that's inspiring to a lot of people, and you've got some great things ahead of you. How can people get in touch with you or learn more about what you have going on?
Reach out to me on social media for sure. Facebook.com/RelentlessCaleb or Instagram at Relentless Investor. And you're always welcome to call as well if you have specific questions, 615-752-8520.
Well, man, thank you again. I appreciate you going a little bit longer than we anticipated and going into detail for us. Look forward to connecting with you again down the road. And again, appreciate you coming on.
My pleasure, David. Thank you so much.
Hey, guys, thanks for listening in today. Hope you enjoyed the episode. Please hit that subscribe button or leave us a quick review. Also, don't hesitate to reach out to us on Instagram, Facebook, or at apartmentinvestingjourney.com. See you next week.